Hey everyone, it's Nick with Us versus Herd. If it's your first time here, you like the content, hit subscribe. If you want to get notifications for when we go live, tap the bell. And if you want to join our community, the UVH fam, links are below to the Discord and our free options trading group on Facebook. If you're here right now, say what up. Good afternoon. We've made it through the fire. S&P's closed up 11 on the day. Dow's up 50, NASDAQ up 50 as well. NASDAQ was the real winner today. Tobin, David, Keith, Jeff, Kelly, how you doing? How are we doing today? Since I've seen you guys last since this morning. I think this is the first time I've ever done a pre-market and then after-market live video. We're putting in the work. We're putting in the work. Nando, what's up? Defense doubled the S&P 500 return 6 months after Middle East turmoil, history shows. Interesting. Well, we'll get to that. We'll get to that in a second. If you guys made money today, comment got paid. If you lost money today, comment learned a lesson. This is what happened to me today. So, gonna go through it. I was actually got paid. Grew account 78%. Congrats. That's what I'm talking about. Yeah, today was a kind of an interesting day. You know, obviously the Bulls won. There's a lot of people that were shorting. You know, for me, before we get into my trades, Hank got paid on UVXY, nice. Before we get into my trades, you know, if we're looking at the S&Ps, you know, there's been a drop the past couple days. People are speaking in all doom and gloom, World War III. And what I'm looking at here is like, you know, if it's not really breaking 3,200, it tried to dip down to like 3,206, and then last night dropped down to 3,209. But S&Ps were holding 3,200 through this whole turmoil, through this whole thing. So I've just been kind of holding, you know, when things get crazy with the market, you kind of have to sit back, relax, and take it easy. And I know what doesn't look good if you're long and it goes against you and your P&L. And sometimes we try to get too aggressive. Like I've been telling you guys since Friday, since all the stuff started coming out. Excuse me. Since all the stuff started coming out, like I'm playing low and slow. I've had these trades on. Like I've had this Home Depot. I've had FedEx. I've had the /ES positions on since last week. You know, and I've just been kind of playing low and slow. Sold some 327.50s, covered puts for BA. You know, when there's this much news and this much stuff that's unknown, especially when we're throwing rockets at each other, like you can't really predict the future. You just kind of have to manage your risk and kind of go along with it. You know, ultimately I was still long. I wasn't looking to get short really because, you know, the trend really wasn't breaking the trend at all. You know, if it started to top out, but right now it's just kind of in the consolidation area, which is ultimately good long term, I believe. I'd like to go over Hangout. Yeah, we can go over JPM, but yeah, let's get through some of my trades here. So today, actually starting last night, I'm going to cover Boeing, and then I'm going to cover my other trades that I have, like the /ES, the S&P futures. But Boeing, I bought the 327.50 for January 17th, so next week expiration for 760. I sold it for 885. So I just did a quick day trade. Sorry, I'm still. Man, I don't know. So this is what I was looking at on Boeing. So again, I was trading on this position. I was trading in the money options. I actually had a limit order in for $10, but I went to go get my haircut, and I was afraid that it wasn't going to get filled, and I didn't want to leave profits on the table. So because I wasn't going to be in front of my computer, I just didn't want. I had a limited order in, but I wasn't sure if it was going to hit 10. I mean, it did hit 1060. It looks like, but it was a little too close. I don't really like playing it too close like that. I know I wanted to buy BA calls today when I feel but I was asleep. Yeah, so I bought them for 760 at 8:53 in the morning Central Time. So let me get rid of this alert here. So right in here on this candle, right in here, I added. It was right below. It was right below 330. I thought we were gonna have a 330 push, but we fell down. I bought them at 760, so I bought them right at the top of this candle. These did come down to 661. I held because it was holding this 328 right here. It's holding 328, and then we ramped up, and then it was actually really pretty boring because we just were really going really slow. I wasn't really sure what was going to happen. So I actually didn't think we were going to recover this much today. And the reason why I wanted to limit risk is we've been having trouble around the 333, 334 area. You know, on Friday, hit 334. It dropped 333 here again on Friday. It dropped. So we were pushing 333. When I sold, we were like at let me see. I sold at 1237. So I sold right on this candle right in here. And I was afraid that we were going to it ramped up these big candles when we have uncertainty. These big candles I look to sell because these could easily just come back down to here. I mean, if you look at what happened when we had a couple big candles, then it went up to 335 almost, and then retraced back to 331. So you just got to be careful, you know. And that's what I was worried about. I was actually worried about this candle. We were going to pop to 333 and then fade back down to 330 because that's kind of where 330 has been holding really relatively well. And 330 on Boeing, 330, you know, on Friday, it bounced off 330 twice. It ramped up to 332, came back down, then it went up to 333. We opened at 328, and I didn't really want to hold. With uncertainty, I don't want to hold anything overnight. I'm already long positions, so I didn't want to add, you know, Boeing, the stress of Boeing going against me. Hank, appreciate it. So for Boeing, I was just looking for a nice, safe. I know I risked a lot of capital, but the things that made this safe was I bought in the money option, I bought for next week expiration, and I bought it below support. So those were the key things for that position. Now going into, you know, at the start of the day, I was down 50 on Home Depot. I was down another 50 on FedEx. These came back. Home Depot came up. I'm actually positive 31, so that's like plus $80 in my account, and I'm actually positive $3 now on FedEx. I don't know why I'm such short breath. I mean, it's like, whew. And then on the S&P futures, I was actually down. I was down 200. Now I'm only down 70 on these. And I actually let me show you. Let me show you what I did here for /ES. So /ES on the 3rd, on January 3rd. So last Friday, I bought the 3280 calls for January 13th for 480. I then averaged them down at like 50% at 235 last night. I could have waited. You know, if we're looking at the futures right now, let me pull up this position here. I'm in January 13th. So I have these right here. So my goal right now, the biggest mistake is I was up 20% on this position on Friday and I didn't sell. When it ran up here to like $4 or $5, I should have sold that at excuse me. Ugh. I'm a mess today. I should have sold up here at 520. These came down overnight because last night, if you guys know, futures were down. Dow was down 200. The S&P's /ES was down 16 or 17. I think 18 at one point. And now these actually close up on the day positive. You know, what I liked here, though, is, again, it bounced at 3206, and then it bounced again at 3207, and then it bounced at 3214, and then from there it really ripped. You know, so I averaged down at 50%. The only reason why I averaged down is because I still believed in the position. I still have time. By Wednesday, we'll see what happens. I'm not going to be looking to hold this into expiration. These expire Monday, so 1 week from today. I'm looking to see what happens by Wednesday. I'm going to give it another day or two to get back to profitable. If I didn't average down, probably would have a harder time. So now I'm holding two of the contracts. So we got some back. We were down pretty big on it, but now we're only down. We only lost $17 today on that position. So we're working our way back. When you're down on a position, like one of the things, like during times of uncertainty, you don't want to just like average down like crazy, because you could be averaging down into a stupid idea. You want to make sure you're slow about it. You make good decisions and just take your time, and you'll get back to profitability. Now, Home Depot and FedEx, I literally did nothing. The reason why is because I still like the position. I was actually, on Friday, I was still profitable. Even though we had a big market drop, I was still profitable on FedEx and Home Depot. So I have a debit spread right now on Home Depot. I paid $1.30. I have the 155 call and the 160 call, and everything I've been doing, I've been pushing out. This position actually expires next week, so I do have 11 days on it. And so on FedEx, and if you guys have been noticing, I've also been trading all these stocks that I've been trading, except for Home Depot. Boeing and FedEx are near or at 52-week lows right now. So FedEx had a solid bounce today, 150 up to 153, and I'm looking for it to run to like 156, 157 area. I'm looking for it to close this gap to 160. So I would like to close my position at 157. So if this week or into next week I can get up to 157, it is a debit spread, so it's a bit safer. It's not just like holding naked calls on that position. And then Home Depot. Let me pull up Home Depot here. Home Depot as well. I have a debit spread. I have the 151. I paid $1.51. I have for next week again, January 17th. I have the 220 call, and I sold the 225 call against it. I paid $1.50. It's now going for like 180. For that spread right now. So we're up a little bit on that position on Home Depot. What I like about that, let's get into both days that we've had strong sell-off. It's been holding off pretty well. I mean, yeah, on Friday it dropped, but it came back up. And then this morning it dropped, but it came back up, and we're actually higher. We're higher than we were on Friday, and it started to break out above the weekly highs. Is trying to get to. We need to break like the 220.50 area, which I think that'll do tomorrow. If we can get a green day tomorrow, it's gonna try to gap up. We'll see. Right now, you have to think about like the trader mentality and the people with risk, right? So think about this. We've have tensions with Iran. We've had a couple down days. It hasn't taken down the market. We literally have taken down the market for about a day and a half, and now we're back up into the green. So if we've tested the resiliency of the market, and if people are starting to realize that even with the bad news, the market is going up, they're gonna look to add, and they're not gonna be as scared to trade during this time of turmoil, whatever you want to call it. I'm not sure. Because technically we just had like an operation in Iran. We're not currently at war or anything like that, even though. So I don't know if they're going to retaliate or not. But right now, it seems like the market's holding up. Took a small loss on the Baidu 136 call, keeping 135s. So Hank, let's look at. You wanted to look at J.P. Morgan, was it? J.P. Morgan. But yeah, that's pretty much my spiel. That's all I had to say. I think this is a little tricky because it did make a low today, lower than support, but it closed above this support level 137. So, if I was going to trade this, like for me, I don't really like these types of setups where it's at like 138, the high is 141, and we're trading in the middle, because what I don't like about it is this could potentially be trading sideways. Like if it trades sideways like this for a week and a half, you're going to get in trouble. But I do think what do they have, earnings next week? Yeah, so they do have earnings next week, so I do like that they did have a little bit of a pullback. And like I was saying in the live stream this morning, is we need to start being mindful. Let me pull this up, of stocks that are having earnings this month, because the stocks that sold off, if we look at the earnings calendar for this month, the stocks that sold off are going to start to potentially run beforehand. So we saw like Facebook sold off. Facebook has earnings in a few weeks here, in about 3 weeks. Walgreens has earnings this week. Constellation has earnings this week. Bed Bath Beyond also has earnings this week. And then, Tesla has been running already, so I don't think that's much of a factor. But, Amazon, possibly Twitter, Microsoft, the stocks, Netflix, like look at Netflix today as well. Yo, Aaron, what's going on? Netflix as well. So like the stocks that have been kind of falling apart, be prepared. People are going to start wanting to take positions on these before earnings. And if they've been selling an awful lot, they have a higher probability to run before earnings. And that's kind of what we're seeing possibly here. Netflix, I was actually on the fence. I was like, should I trade Netflix or Boeing? I don't want to trade both. I just want to take it easy. I want to have a nice, clean trade. Boeing was nice and clean, don't get me wrong. But Netflix was definitely the easier trade. The only thing about Netflix I didn't like is that we were having, now that it did break, we were having this at the time. And that's why it's important to study the charts. Let me... Come on. Now, this is the thing. Let me get back to my mouse. Now, take a look at this. It's actually kind of sloppy, this chart, but you get the idea. Now that I'm zoomed in, it's a little sloppy, but you get the idea. Essentially, I'm going to redo it. It's driving me nuts. I'm going to redo it. Hold on, guys. Sorry. Not that I'm perfect, but I like a little bit cleaner. Okay, so here's a good trade that we didn't take, but this is a pretty good example. So I was afraid that basically Netflix has been riding this line all the way down, came down, touched back up, and came back down. So today it could have went either direction. We could have easily saw the 315, 310 area today. But what we should have done is, as soon as it breached the 327.50, 329 area, and then again at the 330 area, when it breached the 330 area, we should have probably been layering in some long positions. So this is a classic where it's following the trend, and then when it breaks, you're given a good opportunity. And also, like what I was saying, it's kind of similar to the Goldman Sachs trade that I was saying a couple weeks ago, where I was looking in here, and what we should have done as soon as it broke rank right in here, was the resistance was 225.20 area. As soon as it broke, we should have been layering in position because it was good for another 10 points after it broke that. So we have to be, one of the things that I want to do is just be more mindful of these, make better trades, because when these do reverse, what we can do is map all these things out, set some alerts. I could have set an alert for 329. I could have set an alert for 330, and then start taking some positions on here. But like I said, today I was looking for an easy day, but this is a good example of it going against the trend and being able to be profitable, putting on a profitable trade after it reverses the trend. So it's a pretty good example. So that's one of the things. Like if you're not sure how to make money in the market, if you're not sure on what to look for, start looking for types of setups. And a setup like this is very, very, very key into making money. I know that we didn't take a position, but what you don't want to do on these is when it spikes up to short it, because a lot of people think just because it goes up, it should go down, and just because it goes down, it should go back up, and it has nothing to do with that. And people are probably shorting this. Like if you want to short this, you're better off shorting at 338, not 330, not 331. You're better off shorting this double top up in here. If you want to be short, you're better. You have a higher probability of success because it's dropped here in the past, right in here, double topped here. It double topped here again in December 18th, or December 23rd and December 20th, double top right here. So why would you short on a spike here? So it's just a good example of it breaking trend, and that's why you don't short those. You don't short those breaks. You go along with it until you find another point like 338. Now I'm not going to get long it because I'm a little too late, because I'm worried now what's going to happen at 338. We need to see what's going to happen here at 338. So what I should do, let me actually, I'm going to put an alert here. I'm going to put an alert here for 339, and I'm just going to put gap fill. Sometimes you want to make a note. You want to make a note of what it is, because like if you're planning trades like a week out, month out, whatever, you might forget what you actually plan. So I like to put a note in there, like it's just a gap fill. So now if it breaks this, I'll be looking to get a long position in there. But right now we're gonna see what happens. we're not gonna get crazy. I will be livid if that dang Apple doesn't go over 301, 302 by Friday. My stubbornness will be my downfall in this play. Are you long, Aaron? Quite a few buy the dip opportunities. I guess the lesson is if Apple falls 5-10 points, we should just always buy the dip. I'm just kidding. You shouldn't do anything blind, but right now, I mean, for me, I don't do well with straight up. I don't do well. And you always have to figure out what works best for you as a trader. Like some people trade these, they just buy the dip and they go along with it. But my brain works a little bit differently, where at some point in time, like right now, I'm starting to think, okay, this is overvalued. At what point is this going to really drop? I don't want to be caught in the middle. And sometimes you think about the trade too much, and then you get yourself into trouble. So, a lot of this is a mental game. So for me, in hindsight, you're like, oh, this is the easiest trade of your life. But is it really? Is it really? I mean, it's not. For me right now, like, start getting long, building a position. I mean, it's good if you want a day trade or whatever, but if I'm trying to build like a long-term position, like a month out, 2 month out, I'm going to need a bigger dip than 5-10 points. This dip from 306 down to here today was only 8 points. Wasn't enough. And then I don't like, this is kind of a dip. I don't like setups like this where it gaps up on earnings. Like this was an earnings play right here. It went from 208 up to 220, then gave it all back and then some, and then it triggered the ramp up. I don't like those types of plays. So I don't know. I don't know how to value Apple right now. If I don't know how to value it, then I have a hard time trading that. Like I would much rather trade Amazon. I had an Amazon spread set up, didn't pull the trigger this morning, kick myself. I would much rather trade Amazon because they had basically a full year of consolidation, and it did make it did make my top 5 the stocks to watch in 2020. So my top 5 stocks right now are Boeing, Amazon, AT&T, Disney, and what was the other one? Who was the other one? Alibaba. Sorry, drew a blank there. Alibaba. Can you do over PE ratios? Why some stocks are so cheap on a PE level? I don't really like to. I mean, I understand why a PE valuation, but I find that it doesn't really do you any favors when bringing in PE. Like, I don't really use PE ratios because, like, if you were to use PE ratio, you would never buy Apple stock, like, ever, like, in the entire existence, because like Apple stock over the last 10 years, if you look at their PE's always been a lot higher than most other stocks. And it's just because you have to think about it. Like, some certain stocks are in higher demand, which is going to make them have a higher PE ratio. Like, if you're thinking about like big funds, like 401k pensions, those kind of things, and other ETFs and stuff that package in like Apple and all that stuff. If you think about that, it's like, hey, would you rather have an Apple stock that has a higher PE ratio, or like a Snap, which also is high, but you know what I mean? Like, you kind of have to use your judgment on that. It's not always like an apples to apples comparison, because if it was as easy as picking stocks that had a low PE ratio and you were to make purchases, and then versus high PE ratio, you would. I mean, everyone has that same data. You know what I mean? Like, why wouldn't the computer just pick low PE ratio and then wait for those to get expensive and then rinse and repeat? You don't really hear, I find as we go on in the type of market that we in, the PE ratio makes less and less sense. Yeah, like Tesla, Roku, Netflix. I mean, if you're like, hey, Tesla's a $80 billion company and it's worth twice as much as Ford, you're like, well, why is that? Why is that? But you're also, those people are also evaluating the stock as it is today. They're not thinking about what the stock is going to be worth in the future. And you have to think about that when people buy stocks, they're buying stocks for the future, not what it's worth today. It doesn't matter how much Amazon is worth today. You want to know how much Amazon's worth is a month from now, a year from now, 5 years from now, 10 years from now, or Tesla. Like, if people are holding long-term Tesla 20 years from now, who knows? Maybe Tesla's got some, like, flying spaceship and we're all going to Mars and things are crazy, and they have a market cap of $1 trillion, and then we're like, hey guys, remember we were laughing when Tesla only had a market cap of 80 billion, and we were laughing like, why is that? And then Elon Musk is gray haired laughing back, and his company's worth like $5 trillion and has all these spaceships and missiles flying all over the place. So it's like, so you gotta use your judgment of when you're buying stock. You have to use your judgment of what you think that's going to be worth in the future, not what it's worth today. I'm not signing up for Mars first. Yes. All right. Who wants to be the guinea pig? Yeah, the thing is, like, hey, you guys want to fly to Mars? You want to be the guinea pigs to fly to Mars? On top of that, you're going to have to pay 6 to 7 figures to be on that first flight. That could potentially blow up. We're not too sure, but, you're going to pay $1 million. You're going to pay $500,000 for a seat to blow up. I don't know. Now, why would Ford be $10 with the amount of output they do? Tesla can do under $1 million. So the one thing that I will say is, like, for like, if you're comparing like Ford, GM in those stocks to Tesla, you have to think that right now all Ford and GM are doing is meeting supply and demand. So, hey, I need a car, Ford fulfills that. Hey, that guy needs a car, GM fills that. There is no growth. There is no growth. They just meet demand. They're saturated in the American market. They're saturated overseas. They've reached the point of saturation where all they're doing right now is maintaining. And if a company like Tesla and other things disrupt that, their market share is going to go down. Like, if Tesla can figure out how to make a car, let's say between the $25,000 and $30,000 range, we're going to be, I mean, they're going to be in trouble. They're going to be in trouble. You know, if you think about what the average car costs these days for like a working person that doesn't want to get too crazy, let's say you make like $50,000 a year and you don't want to spend too much money, your price range for a car is probably going to be like twenty to $28,000 for that car, right? And then if you can make a car in that range, that's when you start being able to reach everybody, or making the product accessible. But right now, I mean, Tesla started out, their cars were six figures, and then their cars were 80,000. And now you can get, let's see here. Let's see. Now you can get the Model 3. Let's just do existing. Model 3. Well, let's just do so you're looking at 35,000 ish without your rebates and incentives, which is a lot better. I'm not saying it's cheap, but that's a lot better than 120,000 for the Model X. You know, if you go into the Model X or the Model S, you know, these are starting out at 76,000. You're gonna pay $100,000 for this car. Model S, you're gonna be paying for, you know, 89,000 for. And then the Cybertruck actually I think is a pretty good deal. You know, it's kind of ugly, but you know, most trucks right now, a nice Ford truck's going to cost you 60 to 75K, and they're pricing it right in there. I mean, I don't know who's going to want a single motor rear wheel drive, but if it can pull that much, I mean, that'd be crazy. If how much is the Model Y now? I forget. All right, 43. So what I'm saying is, if Tesla can go to the 25 to 30K range, then things are going to get really interesting for them. And as you can see, they've been lowering the cost of their cars. I mean, they had the Model S, they had the Model X. Now they have the Model 3 and the Model Y and the Cybertruck, and the Roadster's more expensive. But the Cybertruck, the Model Y, the Model 3 are all cheaper than the Model S and the Model X. So you can see that they're trying to hit mass production. They're trying to get this into the mainstream. They don't want to just be another DeLorean type company. You know, they want it to be, they want it for the masses. Now, 80 billion market cap, I don't know. But people also were saying, like if you think about Apple, back in the 80s, people were laughing at Apple. In the 90s, they were laughing at Apple. Even in the 2000s, they were laughing at Apple. Then they threw down the iPod. Then they put down the iPhone. And then they put down the iPad. And then they became worth $1 trillion. Now they're worth more than $1 trillion. And their market cap was only a fraction. So if you think about that, it's not about, if you're investing, it's not about what it's worth today. Nobody cares. It doesn't matter how much they're worth today. If we go to Apple here, let's render this baby. You know, back in, let's see at the height of 2000. At the height of 2000, I know they've had some splits and stuff like that, but at the height of the tech boom in 1999, the dot-com explosion, whatever you want to call it, Apple was worth $5 a share at the height. The height. Think about that. They went as low as $1, sub-dollar in 2002. 2002. And as you guys know, the rest is history. So you got to think about that when you're investing. I know I've kind of went on a long rant here, but EV futures great about NIO. Hank, the only thing I don't like about NIO, not to be, and I don't want to sound weird here, but I would side with more of an American company than a Chinese company right now. That's just the way I see it. But yeah, I mean, Toyota, VW, I mean, Ford, GM, they're not going to go anywhere. And Tesla is looking just to carve out its own path, its own lane. I don't think it's not trying to sell gas cars. It's not trying to do anything like that. But it's trying to, where Tesla is right now, Tesla's living in 2030, 2040, while we're living in 2020. I feel like an opportunity like that will never exist again. Well, Aaron, you have to think that Apple created a product that changed the world. At the time when Apple was $5, they were selling crappy computers to the education system. Think about that. If you think about it, any computer you used in school was a Mac, and it wasn't mainstream. You go home, you would use your PC, and then you go to school, and they make you use the Mac and stuff. And you're like, what the heck is this? This is like, it doesn't work well. I don't get it. But this was all before they invented the iPhone, the iPad, the iPod. The iPod started it off. This is before they were making personal computers. They didn't invent a product that changed the world. The iPod changed the world. The iPhone changed the world. So you have to get in front of a company, and then if there's a product like you could have when the iPod. Let's see when the iPod came out. Okay, when did the iPod come out? Okay, the iPod came out on October 23rd, 2001. So in 2001, if we go back to 2001, October 23rd, the iPod came out. And you didn't really know. Let me go back. Let's go to 2001. Okay. So, dot-com bubble exploded. 2001, October 23rd. Right down in here. Stock was $1, under $1. And it probably just took a few earnings reports. And as you can see, from 2001, you had to be patient. Let me pull this back. From 2001, it was relatively flat. It wasn't until 2004 it really started to get some legs. 2004, 2005, it really took off. So I guess the saying is if there's a company around that invents a product to change the world, go all in. My 1,000-pound MacBook. Yeah, I mean right here. I got a 2017. I mean, I'm not streaming from that. I'm streaming from a PC, but every day I still use a MacBook. But the MacBook, like a MacBook and the iMac, it wasn't going to. If they were just selling those, they would have never changed the world. They would have never been the company. They would just been selling PCs and Macs for the people, the small amount. They still only sell a small amount. If we go to, I mean, look at their financials. Apple. Look at Apple's financials. Okay. iPhone is 42% of the revenue. App Store and services 23%. Mac is only 7%. Mac is only 7% of the revenue. 7%. They weren't gonna change the world with a Mac. So we can move on now. CRM. Rant over. Let's see, when does CRM have earnings? That's what I don't know. Okay, they don't have it till March 2nd. Okay. March 2nd. Man, moved 10 points today? Holy smokes. Yeah, I mean, I guess this goes back to Hank. I guess this goes back to you know, goes back to setting those alerts. If we were to set alerts for, let's say 168, because what I see here is it's been getting bounced back around like 167, 165. Once here, one, two, three, four, 5 times it got rejected. Today they said no more. That's what happened. After testing it 5 times, it busted through. Now it's going to be interesting to see when things like this happen and you miss the opportunity. The question is this going to go higher, or is this going to like fade back to 167.50? Reach a lot of times what happens is it'll bust open, it'll fade, retest this area, but instead of resistance, it becomes support, and then it'll bounce up. So we'll see. We'll have to keep an eye on it. I just bought a laptop, need to learn how to use Robinhood or Tastyworks on a desktop. Tried fiddling around, and I was mad confused. David, I do have a lot of Tastyworks videos for desktop. If you search Us versus Herd Tastyworks, you'll find it. Tesla's plans could change everything by providing internet from SACE. Yeah, so I mean, I'm thinking this busted through today, but it's not over yet. I would like, now in a perfect world, retest 167, 168 area, start bouncing off support, we get long, it rips back up to 175. That would be ideal. Well, is that going to happen? I don't know, but that was what I'd like to see. Baidu has some big tech with self-driving cars. Yeah, I mean, any Chinese stock right now is undervalued because of the trade war. Now, if we resolve the trade war, things are going to go back into action. So that's not a bad thing to get long China stocks. But we also have to be careful about being long Chinese stocks too, because at any minute, I mean, as long as Trump is in office, I feel like Chinese stocks are very high risk. But if you don't care, and if you're like 5-10 years plus, just make a purchase of some Chinese stocks every like Baba, Baidu, every month, every couple months. Over the next few years, you'll be okay. Trump is a wild card. Yeah, I mean, yeah. Right now, the scariest part about the deal that we're potentially signing on January 5th, and I say potentially because it hasn't happened yet, is they're saying this is a phase 1 deal. It is not clear how many phases there are. It could go indefinitely. We could be on phase 20, phase 10, phase 15. When's it going to end? I don't know. Not to scare you, but you gotta be. When it comes to the stock market, I'm more of a realist than an optimist. There's a lot of different people in the stock market, or a lot of people that trade in the stock market. A lot of people are optimistic, and then there's people that are realists. You have to decide which one are you. For me, I'm more realistic, and then you also have the pessimist too. But we don't need to talk about them. 2020 phase 2. Yeah, it's like, so the thing is, once phase 1, right now all the lights and all the show is going to be on phase 1. What's going to happen once phase 1's done? They're going to start talking about phase 2, and then it's going to be the whole thing. Oh, we don't know what's going to be a phase 2 deal. Oh, it looks like we're not going to get the deal, blah, blah, blah. Oh, maybe we're going to roll back some of the things that were in the phase 1 deal because I woke up pissed off today. I don't know. When you want to make money at anything, you have to be honest and realistic. Yeah, I mean, I treat the stock market as more of a business, and owning other businesses and entrepreneurship. When you're an entrepreneur, you have to be realistic, because if you're optimistic too much, you could be optimistic in the sense that your capabilities are, you think that your business is going to be another level than what it is today, so it's okay to be optimistic. But if you own a business, and let's say you have $10,000 in your checking account, you're not going to be wanting to go pay rent at a place for $25,000 a month. Just because you're optimistic that you're going to be able to make more than $25,000 a month, realistically, you only have $10,000 in the bank. So that's kind of where I get the realism from. Being realistic is, yes, in entrepreneurship and business, sky's the limit, but realistically, you can only do what your resources allow you to do. Man's rich, John, greed, Jimbo. Sounds like Trump. If you guys do me a favor real quick, hit the like button. I would really appreciate it. I just feel USA owes too much money without the Fed bailouts. Yeah, and that's the thing, is as long as the Fed is pumping, the bulls pretty much have like the wind to our backs. You kind of have to just go with the flow, whether it's right or it's wrong. As a trader, as an options trader, you kind of have to go along with it because you don't have the resources to go against the Fed. You don't. You just don't. You can't pump $500 billion into the market in a day. They can. And that's why with options trading, you just kind of have to, it's a lot easier to make money when you're going the way the trend is going. When you start going against the trend is when you start having issues. Whether it's going up or the trend is going down, you have to stick with the trend. When you start getting some crazy ideas like, you want to short Apple because you waited 2 hours to get your iPhone repaired, it's not going to be a good time for you. Any idea why the repo market needs to keep going? Because the Fed believes that needs to keep going to stabilize the market. So it doesn't matter what we believe in. It matters what the Fed sees. Now, the Fed sees different things than what we see because they don't allow us to see all the data and all the things that they look at, right? They try to explain it to the best of their ability, but they're looking at the economy as a whole. And when we're investing, we're looking at our own personal finances. We don't really care about the guy next to us or the guy down the street. We just care, hey, is my 401k doing well this year? Is my savings growing? Is my investments going well? But the Fed, they're looking at, okay, how is the loan market? How's housing? How's auto sales? How's college debt? How's all this stuff? And from my point of view, what it looks like, I would be very nervous. I don't think I would make a very good like Fed chair or anything because I basically would be sitting on the Fed. I'd be sitting there. It basically trying to manage your finances while all your credit cards are at max limit and you're getting charged a bunch of interest rate. You're getting charged overage fees. You're trying to so basically you're trying to stop the ship from sinking. You're patching this hole, and then all of a sudden another hole got open. You're patching that hole, while you weren't looking, another hole came, and then oh great, I need to actually roll this over into a debt consolidation loan so that way I can take on more debt. And that's kind of how I view the Fed right now. And whether it's right or wrong, it doesn't matter. The question is, how long can they keep it going for? Quite a long time, apparently. Madoff was the king of Wall Street until he got caught up 30 years later. You got to believe in reality and have faith in yourself and your family and leave everything else to God. I agree with you, Tobin. So that's kind of, the thing is, I don't think that the way the Fed is managing things is appropriate, but they're also viewing things differently. They can also print money. We cannot. But you don't want to be like, I'm gonna short my entire net worth because I think that it's a bubble, because they can really drag this on. They can really bleed you out. Like did you guys see The Big Short with Michael Burry? Did you see the Big Short? He almost didn't make it. He lost his trading firm. He lost all. Yes, it worked out, but they kept the scheme going on. He saw that the housing market was a ginormous bubble. He saw the issue, but the market and the Fed and everyone, they kept it going as long as they possibly could. He almost lost everything because of a trade idea he believed in. And sure, it worked out and everything, but I mean, it wasn't good. Emerging markets are moving. One thing that I think that would be good would be the Russell small cap stock. So if the Russell can start winning, because it really lagged behind, the Russell I think would be something to watch. I believe for 2020. But yeah, emerging markets. I mean, look at those ETFs. There's a lot of emerging market ETFs that you could trade. Yeah, you gotta trade with the flow. Don't go against the grain. You'll get cut with razor burn, Aaron. Agreed. So, it's not fair. It's not right. But you just have to manage your risk, like we've been talking about. And the thing is, sometimes it's best not to think too much into it, because then you get like you get very like tinfoil hattish, and you start making decisions based on that versus just following the trend. So we've gone 10 years without a recession correction. Why won't the Fed allow a small one to happen so this bubble doesn't burst, or at least pop this big bubble so investors have a small one? Well, technically, so what they're saying, I mean, it's kind of glass half empty, half full. So because we had a red year in 2018, the bulls are suggesting that we're actually the first year into a bull market, because we had a 20% sell-off last winter. Now, I'm actually going to do a video on this, and I'm going to be looking at the Depression and any recessions. And the recession in 2008 was a potentially once in a lifetime thing by the amount the stock market went down. I'm sure we're going to have red years and all that in the future, but that extreme, it was almost a once in a lifetime. Last time that happened was about 80 years ago. So just keep in mind. So, we gotta, the numbers are what the numbers are. You just gotta trade the numbers on the screen, not look too much into it. We can't, I mean, it's good to position yourself for economic downturn is one thing, but thinking that you need to not deploy any capital because you have a fear of a recession coming, is you're going to miss out on possibly the biggest gains of your life. Because if you get, let's say you're 20s or 30s or 40s, even maybe even 50, and let's say you say, I'm worried that there's going to recession come, and the market runs hot for another 10 years, you're going to miss out on potentially 5-10 years of amazing gains. I don't believe it. The graph looks extremely overwhelming and stretched for a long time. You need some Chinese cough syrup? I need something, man. Yeah, I mean, I do agree that the chart looks stretched, but what I want to see is a year or two of freaking consolidation like we had in 2015. We need a couple of years of consolidation so we can move back up. Let's see if we can get. I guess 2018 wasn't really consolidation, but it's as close. 2018 is the closest we got to consolidation. But for a bull, I would like a year or two of consolidation if you're going to be a bull. But this was 2018. I mean, essentially stuck in range. But we had a 500-point swing. We had a 500-point swing on the S&Ps. Near the end, but it was amazing money-making opportunities and options when we were trading this right here. This is options trading gold right in here. This is it. It's confusing, but it's a lot of fun, and you make fat profits, especially with strangles. So, anyways, I'm gonna jump off. We've almost been live about an hour. Do me the favor, hit the like button. Definitely appreciate it. As always, stay safe, stay green. It's us versus herd. Cheers.